Hello, those of you who happen to be applying for a mortgage or thinking about doing that, and you're wondering what your debt to income ratios are. I want to explain how to calculate it. First thing is you have your front end debt to income ratio and your back end debt to income ratio. And we're going to use the acronym DTI for debt to income ratio from this point forward. The front end DTI is your total proposed mortgage payment or current mortgage payment. That's principal, interest, taxes, insurance, and HOA if you have one. All of that combined, divided into your gross monthly income. Okay, so to make things easier to follow and for me to help follow, if your mortgage payment with all those things combined would be $1,000, and your gross monthly income, meaning before taxes are taken out, is $4,000, then 1,000 divided into 4,000 is 25%, and so your front end DTI would be 25%. And front end is just the mortgage portion of your monthly obligations, okay? Your back end ratio is going to be your mortgage portion plus all other payments that may appear on your credit report. That could be car payments, student loan payments, your minimum payments on your credit cards. So for example, you may have a $1,200 credit card bill and it says your minimum payment's $45. It's the $45 that gets added. So you add up all of those payments, okay? And car payments, everything that's on your credit report. And let's say they all add up to $1,000 also, okay? So the $1,000 for your all other payments plus the $1,000 we talked about for your proposed mortgage payment, that's $2,000. $2,000 divided into your gross monthly income of $4,000 is 50%. So your back end ratio would be 50%, okay? So one of the challenges you may be facing is you're concerned with, or a lender has told you that your DTI is too high. Now it's either truly too high to qualify for a mortgage, or it's too high for that particular lender, because lenders do not always have to accept the highest allowable DTI for the particular mortgage payment. So for mortgage program. So for example, FHA loans allow for a maximum debt to income ratio of 56.9%. However, not every lender goes that high. So you might have a lender that's capping you in the 40s and your DTI is around 50 or 52%, and you're being told you cannot qualify for the mortgage you need at that level. If that's the case for you, then we can help you to get qualified. But now, if you have a co-borrower, for example, or a co-signer, right, their income is going to be added to the calculation, and also their debt on their credit report, which is why it's important to really think closely about who you ask to co-sign your mortgage, because it might not help you if they have not enough income but a lot of debt. It actually could go, your DTI for the total loan application could go the wrong way, okay? Now, if you want to speak to someone that can help you to calculate your DTI, and at some point I will be putting a link down below to a DTI calculator, but in the meanwhile, I'm going to have you follow the link down below to our page on our website that talks about getting a mortgage with a high DTI, okay? So we'll look for you there. You can contact us there. Thanks for watching today, everyone, and we'll see you next time.